Okay, guys, welcome to this new presentation, new video that is Sell Today, Buy Tomorrow Trade in Nifty, STBT Trade in Nifty. This is my new initiative. As you know, that I have been regularly doing live trading videos in Nifty Bank Nifty. This time I am doing a recording video. That means after taking the trades, after taking the position, I am making this presentation how I have taken the trade, where I have taken the trade, everything. That means first I take the trade and then later on I record it and then I will give the trade logic. So let me know, guys, after the end of this video, how did you find this video? Did you find this video very educative, very informative? If you think that it's really helping you, it's giving you education and it's giving you more knowledge, then maybe in future I'll keep making such videos. Now let us see how I have done this trade, how much profit I made in this trade, how I took the trade, everything. Let me explain through this presentation. So this is the first slide. In trading, you should play like Rahul Dravid. In trading, you should play like Rahul Dravid. Why I am saying you should play like Rahul Dravid? Rahul Dravid, known to be one of the successful Indian cricketer, he was known as Mr. Dependent Batsman, right? Because he was also called as Wall. Because he was very defensive player, he was known as a very dependable player and very defensive player. All right. Why I am comparing Rahul Dravid with trading? If you followed Rahul Dravid during his playing days, you have seen that he gives more importance to wicket than hitting big sixes. Rahul Dravid was successful, but he was not known as somebody who tries to hit sixes in every ball. He was the one who always give importance to his wicket. All right. More than hitting big sixes, he was giving more importance to saving his wicket. So that is what in trading, how I'm comparing, you should give importance to your stop loss rather than focusing only on profits. That means preserving your capital. That means whatever the trading capital you have, preserving that capital is more important than trying to make profit in every trade. So that's what you should focus more on stop loss rather than focusing on profits. So if you focus on stop loss, then profits will follow and you can preserve your trading capital. He starts slowly and gradually increases his strike rate. If you have observed Rahul Dravid batting style, the moment he comes to the crease, he would not start scoring in a fours and sixes. He would take time. He would start slowly, then gradually increase his strike rate. That means gradually he would play shots. So that is what in trading also you should start with a small position and increase your position only after some experience. So you should follow Rahul Dravid approach. That means start slow, can't score centuries in every match. Sometimes he also gets out for a duck. If you have seen Rahul Dravid's statistics, even though he has scored many centuries, many runs, but it was not that every time he would score centuries, right? Even though he was a defensive player, he was a very good batsman, everything, but there were instances where he also got out for a duck. So in trading also, you can't make profit in every trade. The moment you take the trade, don't expect that every time it should give profit. Sometimes stop loss also can hit. That means you take one of the best setup, best pattern, and once you take the trade, suddenly it can reverse and your stop loss can hit. So with this slide, I hope you have understood how important is managing risk in trading. Now, why I said all this? Because if you remember, which have done a destination trading recently, that is live trading from Missouri, it is there on my YouTube. You can see that on that destination trading video, I made a loss of 30,750, right? I made a loss of 30,750 in a single trade. So I have taken a trade in Bank Nifty. I was seeing that it was taking support here near some pivot point and then breakout happened. I have taken a short trade here and from nowhere, suddenly huge candle came and hit my stop loss. Within few minutes, I made a loss of 30,000. So after that trade, what did I say? What did I say? I said, I'm not dejected my stop because my stop loss hit. Stop loss and profits are part of trading. It is not possible that every day you make profit. It's not possible that every day you make loss. Anytime suddenly one candle can come like this, and your stop loss can get hit. In trading, anything can happen. So that is why it is always important to keep stop loss. Stop loss is part of trading. Sometime profit target hit, sometimes stop loss hit. On 19th of October, I have posted this on my Twitter handle. Another opening range breakout making today, both Nifty and Bank Nifty trading in tight range, and CPR also narrow today. So big move expected today. So there was a narrow CPR in Nifty and Bank Nifty both. And when I seen it, both Nifty and Bank Nifty was in the tight range, trading in the tight. So I was expecting a opening range breakout in this trade. And I have uploaded this on 19th of October morning before taking the trade. And I have marked this box also. Both are in the strong trading range, right? Strong tight range. And finally, what happened after a few minutes? That tight range, Nifty broken from that tight range. Nifty broken that tight range and started going. And then suddenly it reversed and it closed below the breakout line, this breakout line. So what I mentioned in my Twitter handle, fake breakout in Nifty, Nifty looking weak, but Bank Nifty still inside the range. So Bank Nifty was still inside the range, but Nifty made a breakout. And when I seen Nifty made a breakout, immediately I taken a position of, I shorted 1000 units of 17,600 call option at the time of 10:57. All right. This was the average price which I shorted. Now the question, why I have taken a short? And look at this, where I kept my stop loss just 10 points. My entry price was 61 and my stop loss was just 10 points. Right. So that means I kept a small stop loss so that if my trade doesn't work, my stop loss will be very small. And when I have taken the screenshot, it was trading around 51. Now you will ask me question, why did I take a short trade here? Why did not I take a long trade? Because it was going out from the opening range, right? So on any other day, you must have seen that I am taking a long trade here because after the consolidation, it is breaking the day's high. But I did not take a long trade here. I taken short trade here. The reason is, look at the Bank Nifty. This is the Bank Nifty chart. Look at the Bank Nifty. Bank Nifty was still inside the range. So that gave me the impression that even though it made a breakout, there's a very high chances that it can reverse. So somewhere here, when candle started closing below the breakout line, I taken a short position and I kept my stop loss above the day side. Now you will ask me why I have chosen 17,600 call option, because this is where reversal happened. This is where suddenly sellers came and took the market down. So that is the reason that I shorted this option 17,600 call option. Okay, then again I tweeted on my Twitter profile that with Bank Nifty breaking previous day low, it's a mistake. Okay, it should be previous day high because this is the previous day high. Looks like bears lost the battle and game over for bulls. Here also another mistake. This should have been bulls. I made a mistake while tweeting it. It should have been bulls. As looks like bulls lost the battle and game over for bulls. Morning prediction of big move in Nifty and Bank Nifty came. So this is also spelling mistake. It should have been prediction. Okay. So that is what I predicted. Once previous day high was broken, it was like a confirmation that market is bearish. So what I've done, I have not taken short position immediately on this candle because after a big red candle like this, there could have been another green candle immediately, and that is what happened. After that, there were a couple of candles, green candles, and I waited for that candle's low to be taken. And when it came near the CPR, I've taken another short position in Nifty. I've taken another short position in Nifty as Bank Nifty came near the CPR and it started weakness. Okay. So now you will ask me that why I have taken a short position, because CPR is most of the time is a strong support, chances of bouncing from CPR high, because narrow CPR is not very powerful. Narrow CPR, you can ignore it. Most of the time it doesn't work as a strong support and resistance. That's why I did not bother much. When Bank Nifty came near the CPR, I waited for a few minutes whether it is showing weakness, and it was showing some weakness. So immediately I added another 500 units of Nifty. So I was looking at Bank Nifty chart and I was shorting Nifty. So that is why I mentioned as Bank Nifty touched CPR, I have added another short position Nifty of 500 units at 34.06, and total 1500 units at average sell price of 52.33. So you can see that from 71, I slowly started trailing my stop loss. From 71, I came to 65, and total I have taken 1500 units, that is 30 lots. So totally I was having a open position of 1500 units at the average price of 52.33. And when I've taken the screenshot, it was trading at 39.4. And this is my position at the close of 3:30 p.m. At 3:30 p.m., as Nifty stayed below my sold option of 17,600, right? Nifty was staying below 17,600. My option premium started eroding and finally closed at 28. So this I've taken around 3:30 p.m. at the time of market close, and it was at 28. So my average price was around 52.33, and price was trading around 28, and already I was in profit of 36,490. So what I've decided, I decided to carry my overnight position because at the close Nifty was around 100 points below my option strike. So I sold at 17,600 and Nifty was trading almost at around 17,500, which is around 100 points. And I decided to carry my overnight position. Okay, I did not square off my position. I did not book my profit. I decided to carry my overnight position. One thing I want to tell here everybody that it is very risky to carry overnight position if you are an option seller. Why? Because in option selling, losses can be unlimited, right? In option buying, loss only limited to whatever premiums, but in option selling, losses can be unlimited. In the intraday trading, you can keep stop loss, right? You can keep stop loss. For example, you can see that I had my stop loss here. Even though it was trading at 28, my stop loss was there, which was at the break even, right? My average price, I kept my stop loss. But once market closes at 3:30, you don't have control on stop loss, because next day if market opens with some 500, 600 points gap up, then your stop loss will not be there, because after market closes, your stop loss will get cancelled. When you are selling option, it is very risky to short it, because big gap up happens, then you will be in loss. And stop loss will not be there, because once market close, the stop loss get cancelled. It will not be there in the system. Next day when market opens, again you have to put the stop loss. But suppose, look at this, last traded price was 28 when market closed, and next day market opens at 100 points because of big gap up in Nifty. Some positive news came in the market and suddenly big gap up happens. This 28 becomes 100. Just imagine your loss, right? Because you don't have stop loss and suddenly it opens at 100, then you have to square off at this position. You don't have any control because your stop loss will not be there. So that's why my advice to new traders, don't take the risk of shorting and carrying overnight position, and you may be in big loss if there is a big gap up gap. Or you can do one thing, hedge your position. Hedging the position means, for example, you were short, right? You shorted this market by selling call option. So how you can hedge it? You can same quantity whatever you sold, maybe buy out of the money call option. You can buy out of the money call some cheap options, and you can hedge the position, so that if there is a huge gap up, then you will end up making loss here, but you will end up making profit by buying call option. That is what many people do it. They hedge the position and they control the risk. But I did not do it. I did not hedge the position. I carried naked overnight short position. Now, what was the confidence I was having that I was carrying the overnight short position? Because I sold at 17,600, right? And market when closed, it was around 17,500. Let me take you to the chart. Okay. So I sold this option 17,600 and market closed around 17,500. So almost 80 points, right? So that is what gave me confidence that I carried overnight position. Because next day market has to open above this gap up. So that means more than 80 to 100 points of gap up. Then only I may come into the loss. So that's why I was, since already in profit, already it was 80 to 100 points down move. So that gave me confidence to carry overnight position. But still, it's not a good practice to carry overnight position without hedging. This is the spot chart Nifty, and this is the options chart. Okay, this is the spot chart, and this is the 17,600 call option chart. And second thing, why I was confident because of the theta and because Thursday, next day was just a expiry day, right? And expiry day option premium erodes very fast. So that is the second reason why I carried overnight position. If it was not a Wednesday, Thursday, if it was something like Monday, Tuesday, then I would not have definitely carried overnight position because theta will be lesser. Theta will be more near to expiry. So that is what gave me confidence to carry my position overnight without hedging. What is the theta? Theta means it is option premium keep eroding if it is out of the money as expiry is nearing. For example, just look at this example. This is the Bank Nifty spot chart. Look at this candle here, right? It made a high here, then made a low here, and again it made a high here. And you look at this high, look at this high. This high is above this, right? On the spot chart. Now let us look at the option chart. This was the high, right? This was the high. And in the spot, it made higher than even this size. It made even higher than this one. But look at this. It only came till here, right? So why it happened? Because of the theta. Time decay, because it was out of the money option. So that is what here this candle went above this high, but here option could not go. So that give an idea about what I mean by theta, how option seller have edge by selling option near to expiry. So that's about 19th of October. And next update is on 20th October expiry day. Now let's go to the next one. That is on 20th October update. Okay, this is the chart of Nifty and Bank Nifty yesterday. Okay, 19th of October. You can see that Nifty made a kind of bearish move yesterday and finally closed. Bank Nifty also made a yesterday bearish move and finally closed. After that, which chart I look for? After that, I look for global market charts to see what is happening after the market hours. So let's go to global market now. So this is the Nasdaq chart. This is the US market chart. So you can see that previous night Nasdaq made a sideways day, right? It was a sideways days in Nasdaq. And if you look at the Dow Jones, that is also US market, US indices, you can see a Dow Jones, and even that made a bearish, right? That can give you a slight hint how our market likely to open. But more than that, most important is looking at the SGX Nifty. SGX Nifty can clearly give the picture how market is moving. Now let's go to SGX Nifty. This is the SGX Nifty chart, and you can see here, this is where we closed on 19th, right? This is the 330 candle where we closed. After that, what happened in SGX Nifty? After that, SGX Nifty made a kind of zigzag move, and finally there was a breakdown, right? Finally there was a breakdown and then stayed sideways for some time. Even that range was broken here and then made a small up move. And finally, SGX Nifty is trading at this price, 17,385. And today we are likely to see more than 100 points gap down in Nifty. So for example, this chart, I sold this option, right? I sold this option, this call option 17,600. And currently we are likely to open at this price. So my option sold was this, and we are likely to open in this. So what is going to happen is the option which I sold, which average price of 52.33, and yesterday at the market close it was 28. Now we are likely to see that option trading at almost single digits, because since today is the expiry day and we are almost 200 points below the option which I chosen, and we are likely to open a gap down. So this option you will see comes into single digits. So my profit is going to become bigger. Now let us go to directly Zerodha, because they will update the price in the morning. So let us see what that option is trading currently. This is actually currently adjusted at 23. Option price is 23. Earlier it was 28. Now it is 23. So once market opens at 9:15, this might even come to single digits and my profit will become big. And there is no orders are showing today because my orders were taken yesterday, 19th of October, and next day is today, 20th of October. Zerodha erases previous orders and it will only show the current position. Whatever the orders I've taken today, that will show today. Previous order will not be showing. That's why today only I've taken the screenshot of my sell orders and I kept it. Now, once market opens at 9:15, again I will start recording and I'll show you that what is the currently option trading at what price, 17,600. Okay. So I'll come back again at 9. Okay, guys, time is 9:15 and market has just opened. You can see that as I was telling you that we are likely to open a gap down, and we opened a gap down from here, both in Nifty, Bank Nifty, and taking the support near the swing low, right? That black horizontal line which I marked from the daily time frame, and it is making a bearish candle. So there is a big gap down in Nifty. Let us look at my position now. What's happening with my position? Okay, as I was telling you that earlier it was trading at 23. Now look at the what price is trading around 3 rupees, right? And earlier profit was in the range of 40,000 when I shown you in the morning. Now it is in the range of 73,000. So that is what the power of option selling. Option selling, if you are clear with the direction, if you know the direction of the market and you sell out of the money options, and if you are right with the direction, and if it is near to expiry, today is the weekly expiry, right? Today is the weekly expiry, that is Thursday. Today is Thursday weekly expiry. So all out of the money options is likely to become zero. If you remember, I sold this call option yesterday, 19th of October, 1000 units at 61.46 and 500 units at 34.06, and my average price was around 52, right? And you look at this, what currently price is trading at 3 rupees, single digit, right? Instead of selling this option, had I bought call option thinking that market will go up, then look at my loss. The same profit what you're seeing, it would have been in my loss now. All right. Let's go to chart now. Let's go and look at the chart of 17,400 call option. Look at this. First I shorted somewhere here. Second I shorted somewhere here. But look at this. Currently it is in the single digit. Yesterday market opened, it was around 60 rupees, right? And now it is in the single digit. Now you know, guys, why option buyers most of the time they lose money, because without knowing the direction of the market, they just buy option to make a big profit, and this is what happens. And when market opens, because of the time decay theta, and today is the expiry day, and it's a out of the money option, so it suddenly loses its premium value, and you may end up with a big loss. So that is why, if you know very good with the direction, you can sell option rather than buying option. If there was not 100 points gap down, okay, if there was no 100 points gap down, instead of that, assume that market opened somewhere here, still I would have made a profit because of the theta time decay. So that's what before trading, you should know all these things. Buying option, selling option. Buying option also can work, but for that, immediately market has to go in your direction. As long as Nifty stays below this, I will be in profit because it is out of the money option. Only way I can make loss is suddenly some news comes in the market and suddenly 500, 600 points gap up happens in Nifty. Yeah, that time I can be in loss, but you know that happens very rare. Just look at my position. Currently it is at 3 rupees, right? Okay, guys, I think time has come for me to square off my position. Let me square off the position now. Okay, so you can see that I have squared off my position at an average price of 3.55, and the total profit in this trade is 73,165. So that is the profit I made in Nifty selling 17,600 call option. Okay, and now finally, the strategy which I applied in this trade is from my new webinar. As you know that I have introduced new webinar, that is 25 day trading strategies in Nifty, Bank Nifty. That is the strategy from strategy number 25 called fake breakout strategy. This is one of my favorite strategy. So this is as per the strategy number 25. If you already attended my new webinar, that is 25 day trading strategies in Nifty, Bank Nifty, which I launched recently. In that webinar, if you go to strategy number 25, we will see that strategy. Okay, so that is what I applied in Nifty and I made this profit. So that's about this STBT trade in Nifty. I hope you all liked this video and you learned something new in this video. And if you want to attend my new webinar, 25 day trading strategies in Nifty, Bank Nifty, You can contact me on my WhatsApp number or email ID, and you can enroll for my upcoming webinar. So that's it, guys. And I'll see you soon with a new video. Bye and take care.